Good afternoon, everybody. Welcome to this week, and what a week it has been. Oh boy, we've got lots of inflation news, rate news. We got lots of news, lots and lots of news this week. This has been a kind of. It's also the first weekend of autumn or fall. Most of you say fall. We had that poll a couple of weeks ago. We had a poll, and most of you had decided we're going to call it fall. So I've been trying my best to respect that and putting in fall whenever I can. Okay. Whew, boy, what was I going to say? Oh, so it looks like the new countdown is working. I have not, for a while now, had any more copyright claims from the Grand Slam of Paris. So it must have been that ticker. It must have been that ticker. Of course, you watch. This one will get claimed by them just to prove me wrong. But until that happens, I'm going to just assume that we have been doing all right. Wow. So this has been a crazy month. This has been a very, very crazy month. And I'm going to tell you, actually, I'm going to ask you guys, do you think that September so far is a red month or a green month? So throw it in the chat for me, whether you think this month has been red or green. I'll let you know what it's been. And we'll even look at it. We'll look at it a little bit later. But let me know what you guys think. Has this been a red month or a green month? Hit the chat. Let me know. All right. I very quickly want to mention Blossom. So Blossom is that social media app that is designed by investors for investors. It's a place you can go. You can hook up your portfolio if you choose to. You don't have to. And, people can have a chance to look at it. You guys can critique each other, things like that. It's also a great place just to talk about stocks and anything financial under the sun. I'm over there. If you head over, there's a link down below, by the way, that you can go to get over there. Be sure to follow me. I'll follow you back because I'd like to see what you guys are talking about. So definitely get over to Blossom. I can't wait. All right. Now, I also mentioned today's the first day of autumn. It's actually, of fall. It's very, very funny. There's a whole bunch of different definitions. Like meteorologists tend to think of September 1st as sort of the beginning of the fall season. But I personally subscribe to the actual planet. So once we're at that midway point, that is as in equal distance from day and night. To me, that is absolutely the beginning of fall, and that occurred this morning. I believe it was around 9 a.m. So we're here. We're here. We're in the fall. So those of you who love fall, we're here. Although I will tell you, it certainly doesn't feel like fall. I know yesterday it was about, I think it was like 25 here with a 29 humididex. It still felt like summer. So hopefully we start getting some cooler temperatures, but I'm not holding my breath anytime soon. I know the eastern part of Canada, they are expecting us to have higher than normal temperatures. So definitely. And as we can see in the graphic of our good old buddies there, the bear and the bull, they're at least getting some red leaves right now. Not really. I have a tree right outside my window. I can show you guys. I think I can show you. Can you see? You can almost see. You see how it's mostly green? And a little bit of yellow coming in on a few leaves. But yeah, it's not fantastic. It's not fantastic out there. So I have a feeling we're just not going to get all of the nice bright colors. Who knows? Maybe we will. But normally when you have that kind of heat, you really don't. All right. Let's hit the chat really quickly. Let's get caught up before we move into any news. Jonathan is in here first. Wants to know if anybody's late. Yeah. I know of about 6 people who are late, Jonathan. I know 6. I'm not going to call them out, but right now you know who you are. You've just finished watching most of the stream, and you're coming back to the beginning to catch this part. So yeah, I'm talking to you. We know who you are. 9 is in with holy banana bread in a t-shirt. So yeah, absolutely. One of these days I will try to convince Adrian to make an appearance. That's my goal. That's a goal. Bismarcky says, happiest of Sundays to everybody. Chad is late early. Watch it on the replay. Green. All right, so here we go. So September. Chad says it's green. Jonathan says it's green. Andrew says it's green. Funny Book says it's red. Uh-oh. JJ is currently driving. Normally that's Vic's job, but hey, why not? Jordan's in the house. Good afternoon, Candace. Hope you're well. And let's see. Funny Book says, no pumpkin spice, but love apple season. Yeah, absolutely. I think it's harvest time for the apples. I know if in Nova Scotia, apple picking is kind of a big thing with the Annapolis Valley. They have all these festivals and things like that for apples. Never actually went to them, though, but I've heard about them. Jay is in the house with a hi, everyone. And Chad says, leaves are changing in Saskatchewan. Burr here. Yes, yes. The West is unfortunately not going to get that the fall that we're going to get. They're going to have it a little more chilly, Vinita's in the house with a hi, Candace. Hello, Vinit. Mario says, good afternoon, everyone. And JJ's only in for a short time, but not a long time. Okay. Vinit says, who cares if anyone is late? Yeah, I mean, here's the thing. I have this, I have this stream every week. And here's the thing. If you got something going on with your family, don't come to the stream. Do your family thing. You can always catch it on the replay. So, yeah, I look at it that way. Of course, I appreciate everybody who does show up because it makes my job a lot easier. And that's really funny because I know when I first started the live stream, I was expecting to have to come in and basically talk for about an hour. And I didn't even think anyone, I didn't think there'd be many people there, if any at all. But no, I was surprised. We had a good amount and a good amount of interaction. And I've never really had to get into that, what we call it, like the black hole of broadcasting, where you're just broadcasting to no one and you're, just trying to pump yourself up as you go. Jonathan says late ain't great. I know Jonathan is not a big fan of late. That is absolutely true. That is absolutely true. We got Lisa in the house. Good afternoon, everyone. Terry is in the house with smack that love button, people. Yeah, absolutely. Hit the like button. Let's get this out. Let's get some people in here. I'm going to have a sip of coffee while you guys hit that like button. Oh, very good. Very good. All right. Looks like Chad hit the button. Meow says red. Meow says red. So we've had two people say red. Two people. Interesting. Meow is also saying hit the like button. Let's see. Nuke Stonks pooped last week. So uranium went down, did they? Did uranium go down on us? Uh-oh. Never good, never good. Vaughn is in the house. Vaughn says, good afternoon, all. All right. So September. September is actually in the green, folks. September is in the green. On Friday, on the market close. So anybody here who was at the market close on Friday knew the answer. We actually pulled up the chart for the month. And believe it or not, September is in the green. Now, will we end in the green is going to be the big question. And I can pull that up later. After we're done the news, I'll pull that up again if you guys want to see it. But here's the big question. Will we end in the green? I think we will. However, this upcoming week is going to be the make it or break it for the week. So we'll have to see. Now, the previous two Septembers were both red. But this September, so far, we, and we can even if we had a red week, but not a big red week, like a little red week, we could still end in the green. But we'll have to see. We'll have to see how this week rolls out. So there we go. Um, Poped, I mean, darn Apple phone with pineapple fingers. Uh-oh. Uh-oh, that's never good. That's never good. um, what's one of the things I actually love with this new Apple, and I showed you guys this before. I cannot show you, I can't actually log into the phone because it is in use. Actually, once again, I can't show it to you guys without losing all my formatting here. Basically, now on the phone, I can actually pull my phone up on my computer and use my keyboard. So that that solves the pineapple finger thing. Because sometimes I really think whoever designed these phones, they designed them for people who have like really, 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 really small fingers. So that's not good. That's not good. All right. Oh, so nuclear went up. In other words, wow, that was hard. Okay. What's your view on the S&P 500 for the end of the year? Okay. Great question. So I see, for one, I do see volatility between now and the election. People are on edge, and I think that's going to stay that way. Now, here's the funny thing. After the election, we'll finally be able to settle into a much less volatile market. So I do think between now and the market, we are going to overall be green, but it's going to be a rocky ride. It's not going to be a tromp through the field. It's not, we're not going to have like the theme song to Little House in the Prairies. We're running across a field. It's not going to happen that way. It's going to be rocky. There's going to be times where we're going to be like, and I think there's probably still some surprises out there. It's actually funny. I made a kind of a funny little prediction this morning. I was actually saying, I was saying to Jill, I was like, I have this funny feeling that if Donald Trump decides he has lost and he knows he's not going to win, I could see him doing something really silly like 2 days before the election saying, yeah, I'm pulling out of the election. I can see something crazy like that happen. Now, Jill thought I was crazy for thinking it, and maybe I am. But this has been a year where all these things that we really don't think should happen have happened. So who knows? But that's going to be my silly prediction for the election. I don't know. I mean, so many things can happen between now and then. And his ego may not let him sort of step down if he's not going to win. I don't know. I honestly don't know. But that was just my crazy prediction. We'll see if it comes true or not. Probably won't. If it comes true, I'm changing my name to Nostradamus. I swear I am. 9 says, I try to like all your videos and streams so you get more subs. Oh, well, thank you. Thank you so much, 9. Yeah, absolutely. I mean, basically, the way the algorithm works is the more you interact with things, whether it's even going in, and this is the funny thing, you can go into the comments and just say, great video, or hey, thanks, or hey, how you doing? That type of thing. That's all interaction, and that drives the algorithm. So it tells the algorithm that, oh, people are interacting with this video. It must be good. Let's share it to more people, and we'll see if we can get some more clicks. So that's kind of one of the ways that algorithm drives. And that's why, you hear YouTubers always going, like and subscribe and all of that stuff. Now, in my videos, I actually don't tell you to like my videos. I do tell you to sub just because, I gotta do one thing. I gotta have one call to action in there. But yeah, anyway, I just think it's kind of just weird, I guess, the way it works. So that interaction always works. And I look at it this way, unless I absolutely, when I'm not, not watching myself, but if I'm watching anybody on YouTube, as long as the video held my attention, they get the like, just for the simple reason that I'm there. I understand the algorithm. Now, occasionally I'll click on a video that I absolutely detest. I just won't do anything with a video like that, because here's a little secret. The algorithm treats a like and a dislike as the same thing. So it's still interaction. It doesn't care If you could quite literally have the most hated video on YouTube, but because so many people are interacting with that dislike, it's going to push that video out like crazy. So sometimes you may wonder, why do I always get these crappy videos? And that's sometimes why that will happen. But anyway, that's just the algorithm. Off on a tangent there. Chad says the S&P will go up, I think, if you let's see, if you minus the Mag 7 lots, medium, small caps, they're heavy in debt, can't beat the S&P over the long term. All right, we'll digest that for a second. Tesla doing better than HMM.A now. My worst stunk. I know they've had a rough year. Believe it or not, though, I'm still bullish on them. I am still bullish on them. I have to look at them this week. If they go down at all this week, I'm going to grab some more. That's for sure. Chad says, be 1995 again, I think. But what I know, just always buy 2x more of the dips. There we go. And that's definitely one of the things that you can certainly do. Buying the dip, it's not a bad thing. It's not a bad thing. But keep in mind, when it comes to investing, dollar cost averaging still wins the day unless you are really, really good at hitting the dips. And sometimes that's going to be very hard to hit the dips because, unless you got that crystal ball that lets you know, oh yeah, this is where we're stopping. We're coming back up. Bismarcky is keep buying HMM. And Chad says holding 140 shares of HMM.A. Yeah, and I don't even know if I'm currently down with HMM.A, but let me take a gander. Let me take a quick look. I can't show this right now, unfortunately, but I can still look and I can relay it. All right, just give me a second here. HMM.A, where are you at? Oh, there you are. All right. My total return right now on HMM.A is 0.28%. So I'm pretty much about even on HMM.A. All right. Let's see. You buy into like 5.55 a share. So yeah, and it's right now, like, what is that HMM? Just a second here. It is currently sitting at 892. Yeah. Absolutely. Now, I know I have some HMM.A in other places where I got in much lower. So, but yeah, no, I'm still pretty happy. And I'm honestly, if they were to go down to like $8, I'd buy a whole bunch. I'd stock it up. I do understand what's going on with that business. I understand their business model, and they've got a lot of customers. They have between them and Howard Hammond Power Solutions, I think they're really, really set to have a good year. So I'm looking forward to 2025 for HMM.A and HPS.A at the same time. All right. Let's grab our first news story. All right. Of course, it's got to be our inflation reports. So in Canada, we had 2 inflation reports come out this year. Of course, we've had many this year, but this week. So we had our CPI, that dropped. Now CPI, holy banana bread. Year over year, we came in at 2%. We hit the target. We're there. We had really strong projections for how we were going to do. We were expected to come in at 2.1%. So we did exceed that. Last month, we were at 2.5%. Now, month over month, we came in at negative 0.2%. We were anticipating a 0%. Last month, we were at 0.4%. Core, so when we strip out food and energy, year over year, we came in at 1.5% on core. We were anticipating 1.7%, so we absolutely exceeded that. Last month, we were at 1.7%. And core month over month, we came in at minus 0.1%. We had anticipated 0.2%. Last month, we were 0.3%. So we owned the CPI. That's fantastic. Nothing wrong with that. Now, we also had our PPI. Now that came out. So our producers price index. So this is your wholesale inflation. Year over year, we came in at 0.2%, which is crazy. We were supposed to come in, we were expected to come in at about 2.7. And last month we came in at 2.8. So I looked at that and I was like, dear God, what the heck is going on with that? Now, month over month, we came in at negative 0.8%. We were expected to be in the negative at negative 0.3%. Last month, negative 0.1%. So this is good. This is good. However, now this doesn't really apply to core, but when you think about that CPI, right now oil is down. So that is definitely playing a role. So that 2%, it might be a little bit of an illusion. It may actually be a little higher than that because you do have to take that into consideration. However, holy banana bread, the economists are now going crazy. And they're basically, a lot of people are saying, we got to start coming in with some aggressive hikes. So it's time to start seeing them 50 basis point hikes. It's time. Let's start cutting a bit more. Now, there's a bit of a danger here. Not the danger in cutting, but the reasoning behind why we might want to cut a little bit more. So economic growth in Canada has been absolutely losing steam. So we're at that point where a recession's not that far off, to be honest. So our gross domestic product in the third quarter, it's likely basically to fall below what the Bank of Canada is forecasting. It might be still above the 0%. So technical recession is not close, but it's not doing good. And here's the thing that's really, I think, a big concern is unemployment. So we can't see unemployment continue to rise. Right now, we're at we're not doing good. We're not doing good. Yeah, employment itself, it's a situation when that next job report comes out. If these numbers start going up, I think we're going to start seeing some bigger cuts. It's not so much because of the inflation target. It's going to more or less be to try to stimulate the economy to prevent us from falling into a recession. So that's kind of that thing. And even with the US, where they did that 50 basis points, that's kind of the same idea. Their economy is starting to slow down. I think it's a big thing. It could be a very, very big thing as to how we sort of look at this and how we go forward with it. So I'm hoping that we don't hit a recession. I do not want a recession. I don't think any of you guys want a recession. It's actually funny. I would have welcomed a recession, maybe a year ago, and get it done and over with. But the route that we have charted, I really don't want to see it. I want to sort of keep things moving, see if we can, stick to the soft landing. All right. Let's see. Chad says, so DCA is up. I'm like $11.50 per share. I should have went with Power Corp. CPI is a lie. And some people do disagree with CPI. Some people think that they don't have the right things in the basket. I understand that. I definitely understand that. Let's see. 9 says, you think gold will drop short term? I've been DCAing into it for a while. All-time highs at the moment. I know a lot of analysts expect gold to do well for most of the year. And it may very well do very well. But it is hard when you are at all-time highs right now. And I think while we have a lot of uncertainty with the election, with volatility, I think gold will probably do fine until the election. I think after the election, we could perhaps see a bit of a correction on gold. So definitely it is something. All right. Chad says, physical gold or shares? Shares, you don't own it. Nothing. Oh, boy. Let's see. Gold, I think, all-time high these days. Let's see. Shares for gold attract spot to make money, not so much for ownership. Yeah. I mean, it's nice to have physical gold, but at the same time, there's you have other concerns when you are holding physical gold. For example, storage, what you're going to do with it, all of that. Plus, it doesn't have as much liquidity. So, and you can argue, sure, you can just you can throw your gold in a truck and head to an exchange or something and sell it pretty quickly. But I don't know. Personally, I'm not so much into physical assets, but I know a lot of people are. I know Chad is. Jordan, who shows up. I don't know if Jordan's still here or not, but Jordan, I think with Jordan, it's mostly silver. Let's see. My layoff season coming quick. 1/2 more jobs, unless an emergency shutdown. Yikes. Yeah. Let's see. Physical gold has risk too. Can be stolen, seized, just like shares. Buy a better safe, 9. There we go. Yeah, get a better safe. Oh dear. Let's see. How many shares of gold actually physical gold, silver? Yeah, I mean, the thing is, there's nothing wrong. Like, I don't think there's anything wrong with having exposure to gold through an ETF, for example. Yes, it's not only you don't technically own gold because obviously the management company of that ETF, they're the ones who are holding gold. They're basically just doing everything, and they're selling you part of it. But you can't just sort of walk into the ETF with the shares and say, "I want my piece of gold right now." So, you can't do that per se. So I understand. That's kind of same thing with crypto, right? You have that whole if it's not your crypto, or if it's not your keys, it's not your crypto. It holds up. It holds up both ways. So you have to sort of look at it. Now, where Chad would be a winner is, let's say something big did happen, and like some kind of a huge black swan event, like a solar flare or something like that. If you got the physical gold, well, yeah, you might be better off. But here's that thing. I mean, if you've got a physical gold, it's not like you're going to trade gold for for a loaf of bread or something if you're hungry. Because you would absolutely be taking it at a big loss. But just something to keep in mind. Jordan, yeah, I thought Jordan might still be here. I stack silver. Oh, you do stack some gold as well. I always hear about Jordan talking about silver. So let's see. Can't print shares, can't print bars. I stack all. Mario says, I love Amax. Stacking metals is great. Chad got barter systems. Okay. Yeah, and it's actually funny. There are places where there's like an underground economy. Now, I don't know in Canada, but I assume maybe Chad is talking about that. I know in Florida, because when I spent some time in Florida, I had heard about the underground economy. So it was like, instead of trading for money, people would trade skill sets. So, for example, let's say you needed something built. You would trade something that the carpenter needs, and the carpenter would come in and build it in exchange for whatever service. Maybe you do taxes, so maybe you would do his taxes, and he would build you your cabinet or something. So a lot of things like that. I know that happened a lot in Florida, and I'm not surprised. Like, I think if I had to sort of guess of a place in Canada where that probably would happen, the prairies seems to me like the type of area where you might have that level of community. Let's see. That's what silver for low end stuff. Let's see. Jordan says, I talk a lot of silver because it is a cheaper metal that allows anyone to start stacking metals, like an entry level investment. Okay, fair enough. And Muggsy says, oh yes, the good old barter system. Nothing wrong with it. Nothing wrong with it. Absolutely. I mean, I look at it this way. If you have a service that your neighbor needs, and they have a service that you need, just by trading services, you're avoiding all of the taxes and everything else. It's not a bad thing, although I'm sure the government probably frowns down upon it. But I say go for it. I say go for it. So I'm definitely a fan of the barter system. All right. Now, we also had another big report that came out this week. And believe it or not, it was our retail sales report. So Stats Canada, they released our retail sales data for August. They released that on Friday. So August actually saw an increase of 0.9%. And keep in mind, this is only the third month this year where we've seen an increase in sales. So we were expecting an increase, though. So it's not unexpected. We were actually anticipating an increase of 0.7%. So we beat that by a wee bit. That's not too bad. July, the previous month, they were one of the other months where we had an increase, and it was an increase of 0.2%. So overall, retail sales are tracking a 0.8% rise in the third quarter, assuming that we have flat growth in September. Now, keep in mind, there's a lot of sales in September. Just think of back to school. Now, I know a lot of that probably happened in August, but I know when I was a student, we never knew what I needed until after the first day of school, we'd get that list to bring home. But there's certain things you can certainly buy ahead of time, and you're going to need loose leaf and binders and all of that type of stuff. So not too shabby. So yeah, in the second quarter of this year, we did have a 0.4% decline. So, and a 0.5% decline actually in the first quarter. So this could be a good quarter where we finally have a little bit of movement up in sales. And of course, going into Q4, we got the holidays. So going into Q4, we have the holidays, and that is definitely going to help, I think, with sales for sure. Especially now, part of this might as well be rate cuts, right? So I think people, as they're watching rates come down, they're starting to think this is, this is not bad. This is not bad. Maybe it is time to start spending again. Now, the CIBC, they've actually been anticipating some really big rate cuts in Canada. So if we get a couple of 50 basis point ones, which I think they were saying 50 basis points in December, 50 basis points in January, that could certainly help people start to get a little bit more towards sales. Jersky says, probably a good idea to hold some physical gold and silver. I'm feeling on the farm side of things, it feels like a recession is trying to happen. Yeah, I mean, it's kind of this thing. I think we're at a point that I don't think the current government would even allow it to happen. Even if they had to start driving inflation up again by money printing, I think you'll see whatever it takes. I think you're going to see it, but I don't think we're going to actually see one. Now, mind you, if we get a vote in non-confidence in the spring, which is kind of where I'm thinking it's going to happen, then we could at that point start to see something a little bit different, because I think the conservatives are going to be more or less let's get things, if we have to endure a recession, let's do it. Let's get it done. But we'll have to see. I think it's going to be very interesting the next year in Canada for sure. So, it'll be neat because this has been an interesting year in the U.S. politics. Next year will be our turn. So we'll see how that all comes out. Chad says, I'm almost farmer live in the country, away for city folk. There we go. 9 says, I saw a video from a silver stackers channel where a viewer of his got his huge safe of silver stolen. Ooh, yeah. Well, here's the thing. If you are a stacker of silver, gold, or anything valuable like that, one, you don't want to ever advertise it. Like, never talk. Don't even tell your neighbors about it. Because all it would take is your neighbor may be fine, but your neighbor might happen to just mention it to somebody who isn't fine. So you want to keep that to yourself. And, or maybe you might want to have an alternative location where you can actually store a safe that nobody's going to find. So, or spend the money to get a good one, like a floor mounted or something. Make sure it's fireproof. I mean, with gold and silver, it probably wouldn't burn through it, but still doesn't hurt to have it. Just make it cleaner, that's for sure. Yeah, and that's what Chad said. Need a better safe now. That's 2 times I've said this. If you're stacking, don't skimp on the safe. Don't skimp. Not at all. Still silver stacker. There we go. Oh, the fun, the fun, the fun. All right. All right. And of course, we kind of already alluded to this. So the US Fed, they did, of course, make their first rate cut. So they've joined Canada as a rate cut nation, and they actually came in with the 50 basis points. So that's nice. One of the things I like is now that the Fed has finally cut, people can stop worrying about Canada getting too far ahead of the FUD, the Fed, because the concern, and there was a concern. I mean, yeah, if we got too far ahead in the rate cuts, it could potentially impact the Canadian U.S. Dollar, that relationship. We don't want that to happen, and we did have a buffer, and we have stayed within the buffer. I think that's one of the reasons. I don't know how much more of a buffer we have after doing 3, but now that they've done 50, we're only 1 ahead of them. So I think it's fine. I think it's fine. It's good to see that the U.S. has joined in. Now, the Fed did indicate, and this is what came out of their speech, that they have gained greater confidence that inflation is moving sustainably towards their 2% target. And they have judged that the risks to achieving their unemployment and inflation goals are pretty much in balance. So that's made them confident enough to start cutting. They are also eyeing an additional 50 basis points cut by the end of the year. So basically two 25 basis point cuts. So we'll have to see how that all goes. But keep in mind, the job numbers are going to be huge, because if those job numbers keep getting worse in Canada and the US, you could see things get a little bit more aggressive, because both the Fed and the Bank of Canada are going to do what they can to avoid a recessionary conditions. Although, is it too late? That's kind of the thing. And that's one of the things that a lot of economists have been warning the Bank of Canada, that if they don't cut a little more aggressively right away, there is that danger. And the danger could also be that, what if we overshoot our target, right? 2%. Well, I can't wait to see what that next CPI says. We might be below 2% next time around. So it's going to be interesting. Now, if fuel rebounds, though, that could be good. It could keep us back where we should be. But I think we're getting to a point right now that CPI is not going to be that big of an issue. I think now the big report that we're going to be watching each month, we'll still bring up the CPI and everything, but I think the big report's going to be that jobs report. Let's see what's happening to the jobs, and let's see what's happening to that GDP. So there's still a lot of pain, I think, overall in Canada, but I think it's going to get to that point where, people will at least adapt to it, per se. Paul says, treasure map to the woods for your gold and silver. There you go. Yeah, hex marks the spot. Well, it's well, it depends. If you live in rural, or if you have a whole bunch of property, yeah, why not? Just whatever you do, don't lose the map, right? So if you have a paper map to your hidden gold berry spot, and then your house burns down, you probably still need a fireproof safe for that paper map. So, yeah. Let's see. So Chad says mine's fireproof and insured and bolted in concrete with ceramic fibers as my trade. Yeah, there we go. So, I don't think Chad has any worries about that safe of his. And he's challenging you. Come try. I don't know. Maybe Chad's got a prize or something for any of you who can steal his safe. Don't do it, though. Please don't. Paul says 1, 2, 3, 4 combination. Oh, yeah, good old combination safes. Let's see. If you can get past my cameras, Fleur, and all my neighbors own guns, dogs, come find out. This is not Ontario. And he'll draw you a map. Oh, boy. This is like, we're devolving. We're devolving. I don't know into what, but a 9 says, in Canada, you will be thrown in prison if you use guns to defend yourself at home. This is true. This is true. The law says that you are allowed to use only the amount of force that is sort of equivalent to the threat. So, if, for example, somebody comes into your house and you shoot them, you're probably going to jail. So it's it's not the US. The US, you can pretty much shoot somebody for coming into your house, as long as you feel. Now, if somebody does come into your house and they have a gun, you're probably allowed to just shoot at that point. I don't think it's a situation where they have to shoot first, but anyway, let's hope that never happens. That just doesn't sound very fun. Let's see. Come find out. Force plus one. All right, let's get to our next news story as we slowly move away. All right, so Wealthsimple. Good old Wealthsimple has now hit their 10-year anniversary. So that's pretty darn cool. Not only have they hit 10 years, they've also reported profitability. So that's not bad for a new company. 10 years and you're profitable. That's pretty good, actually. So they did start mostly, I don't know if any of you remember the beginnings of Wealthsimple, but they mostly were a robo-advisor. But now they, of course, grown so much beyond that. And they have become one of the favorite destinations of do-it-yourself investors. Definitely easy to use. They currently serve more than 3 million people. Actually, funny enough, most of their clients are millennials and Gen Z. So definitely interesting. So in their most recent quarter, they reported 129 million in revenue, which is up about 88% from last year. So that's not too shabby. Right now, they currently have more than $50 billion in assets under management. And right now, funny enough, even with $50 billion in assets under management, they're only about 5% of the size of CIBC, just to give you a perspective on that. And CIBC is Canada's 5th largest bank. So, they're definitely small, but they're really they were kind of that first real alternative to big banks. And they have, of course, moved into mortgages and tax services. So they have a lot of things going for them. So I definitely love, I love Wealthsimple. I think they have a lot of good stuff. I have a feeling that if Wealthsimple hadn't come along, I don't think National Bank would currently have commission-free trading like Wealthsimple does. So another thing I really like about Wealthsimple is, as I've watched them over the last few years or so, every time I think of something I'd like to see them come up with, they add it. So not too shabby, not too shabby at all. All right. Now, any of you who are interested in Wealthsimple and haven't tried it yet, there's a link down below, by the way. We both get $25 if you try them out. So never hurts to try something out. I do like them for sure. Let's see here. Paul says the criminals have all the rights in Canada. Yeah, sometimes. But what can you do? All right. Yep, so dumb, says 9. Yum, Tibetan massives have 2, but my cats would mess you up. Okay, so Chad has attack cats. Those are the best type. Those are the best type of cats. You got them attack cats. Let's see. Then you have to deal with the 200 pack of yotes. I don't even know what a yote is, but it sounds scary. Paul says, don't vote for the Liberals. I have a feeling that the Liberals aren't going to get a lot of votes, Paul. So you probably don't have to worry there. All right. We're almost through the news. We're getting there. All right. So there have been more changes to how mortgages work in Canada. So previously, if you were taking a mortgage for a house over $1 million, you needed to pay that full down payment of 20%. That's the rule. So the government has now changed that. So they have increased that cap to 1.5 million. So now if you're buying a house that's 1,499,000, you can get it with less than 20%. Some cases you can even get a down payment as low as 5%. So, that is one of the changes. Now, partially the government, I think the Liberals are trying to appeal to young potential homeowners to try to win some votes. So they also added a little bit more. They changed up that rule on the 30-year mortgages. So if you're a first-time home buyer, you'll now be eligible for mortgages spanning 30 years, up from basically the maximum was 25, but they've added 5. So that can slightly increase affordability in the short term. So yeah, they're trying to win new votes. But here's a question I have. Are these changes even good? Are they even good? Maybe not. Maybe not. Because here's the problem. So generally, when you are looking at buying a house, you want to get as much down payment as you can. Heck, even if you can do more than the 20%, it will serve you well, because the aim is that you want to have that minimum amount down to help lower your interest costs and to boost equity as well in your home. So by, letting people get houses like with a 5%, yeah, you're hurting. You're going to be paying a lot more interest. You're going to be paying a lot more interest. In fact, if you get a situation where somebody pays 5% on a $1.5 million home, and then they amortize it out past 30 or out to 30 years, very little of what you're going to be paying monthly is going to be going towards the principal. It's going to be mostly interest, or in some cases, it could almost be all interest. So, I don't think these are good changes at all. But the government's trying. The government is certainly trying. Oh, those are coyote. Oh, that's what yotes are. Coyotes. Okay. All right. Tom says, very general question, but what are you looking for in terms of buys for Monday's open? It's hard to say. I don't really have I think the first thing I need to do is to see what's going to happen with the trend on Monday. So right now, I do not know if we're going to have a green or a red market. We might start off red only because I think people have tend to get a little bit kind of antsy at the beginning, and then they settle in a little bit. So, but I don't have anything really in mind for what I'm going to buy on Monday's open. I will be looking. I will be watching HMM.A. If they fall lower, I will certainly grab some. But and I'm probably going to look. I've already made my buy for Air Canada, so I probably not going to worry too much about them. But if I hadn't made the buy already, I would certainly be watching them to see what happens as well, because they did have a little bit of a fall last week, and that was they went from like a little over 16 down to 15 something, so that wasn't too shabby. All right, Chad owns 2 houses with no mortgages, but Monday stock ticker. All right, yeah, Monday's coming pretty quickly. Let's see, last 10 minutes markets all the action. Yeah, you'll actually find with the market, I find the first hour to 2 hours to be the most crucial, and also the last hour. That's where I find the most amount of movement. Then normally through the rest of the day, things are they've settled into a groove, and you don't normally get a lot of movement, depending on the volatility, right? If you have something very, very volatile, you can sometimes get some explosions in the middle of the day. Or if you have news events that are driving those explosions, you'll get stocks doing some pretty big movements one way or the other. Same thing with Bitcoin. Sometimes Bitcoin does some pretty interesting things in the middle of the day. So definitely something to keep in mind. Let's see. Monday is a ticker, actually, USD stock. Oh, are you talking about that? Isn't that like a software like a project management type software, Monday, I think. I think I heard of that. All right, let's grab. We're almost through the news. That's fantastic, because then I can pull up the other screen. All right, so we had some elections, some by-elections this week. Oh boy, so we had two. So first of all, we had. We'll start with the Montreal riding. So the Liberal stronghold of LaSalle and Mar-de-Verdun, and they lost it. The Bloc Québécois managed to take that riding from the Liberals. Now, they didn't take it by much. They took it by 250 votes, but nonetheless, they did take it, and that's the second stronghold the Liberals have lost. You know, in like what since August, was it early August? I think they lost the first one, but yeah. Once again, there's going to be renewed calls within the Liberal Party for Mr. Trudeau to perhaps step down. Will he do it though? I don't think he will. I think he plans to hold tight for now. But this is not looking good. It's not looking good for the Liberals, where they are losing their strongholds. So that if Trudeau sticks around until the next election, there's just no way that they'll even be the official opposition. They're gonna really fall big time. So at this point, and this is what, if I was running the Liberal Party, well, not running it, but if I was in the Liberal Party, I would be making a plea that we got to get rid of him so that we can maybe get our official opposition role in the next government, but not with him in there. They're losing way too much. Now, the other election, which was also just as interesting, was the Elmswood Transcona, which is in Winnipeg. So the NDP, and this one's a bit of an NDP stronghold, but they did manage to hold on. So Leela Dance, who is the NDP member there, did win the seat for the NDP, but not by a lot, 1,158. That looks big, but that's really not that much when you're looking at an election. So this was a good thing. Now, I have heard lots of rumors on the Hill. Like, one of the rumors is that part of the reason that the NDP tore up the deal was to try to win this seat. I've heard that rumor. I don't know if it's true or not, but I do understand that the NDP is looking to distance themselves from Trudeau, and that definitely is good. And I know there's been a lot of drama in the House in the last week. So, yeah, politics. What can you say? Oh, boy. Now, we got one last story, but just give me 1 second here. Let's see. Chad saying November 5th for Bitcoin, then the moon. All it takes is one vote to lose by Liberals. You can, conceivably. Now, mind you, if you beat the Liberals by one vote, there's going to be recounts, and God knows what can happen to that, because whenever there's recounts, you've got scrutineers in there that are just scrutinizing, and there's always some ballots that get disqualified in a recount generally. Let's hope that doesn't happen though. Yeah. All right. Once again, we got Beaver Tiff Macklin back. So yeah. So Tiff has come out with a warning about AI. Yeah, even Tiff. So he's warning that artificial intelligence could add up to inflationary pressures, as well as the price and labor volatility in the short run. So he has basically said that strong investment in AI is boosting demand as rising equity prices and hiring add to consumption. He also went on to say that electricity demand is also surging because of the massive computing requirements of the technology. And that's true. Absolutely. If these forces outweigh the expansion of productive capacity, the result may be faster price growth. Now, yeah, so he's basically saying there could be some impacts to productivity. Well, here's the reality. AI is going to put a lot of people out of work too. So that is going to happen. As far as I'm concerned right now, I think AI is at a point that it could easily handle all the call center jobs. I think we're at that point that AI would do a fine job with the call center jobs. So why not? Why not let it? I mean, yeah, there's going to be. I mean, nobody wants to work. I don't know if anybody wants to work in a call center, but um, it's going to happen. It's inevitable. Now, Tiff did say that in the long run, that they do expect AI to boost productivity. So higher productivity allows for higher wages and more spending without pushing up inflation. So sort of like some short-term pain that'll get us to some long-term gains. So yeah, that's definitely kind of interesting. All right, now I'm just going to finish up the news here just to get it out of our faces. So coming up this week, we don't have a lot of stuff coming on, but in Canada, on the September 27th, we do have our month-over-month GDP data coming out on Friday. In the U.S., they also have some GDP data. It's their Q2 second revision. That's coming out on Thursday. Then on Friday, their PCE, so personal consumer expenditures, which is at least for the Fed, it is their preferred measure of inflation. So that is coming out. Not a lot of earnings this week. I guess in Canada, well, if you like Aritzia, they do have earnings coming out. And those of you who still love the BlackBerry, they've got their earnings call coming out this week as well. Holy cow. All right. Just give me a second here. Let me get rid of these. Now, I don't really have anything in the crypto news. Crypto has been kind of doing its thing, holding steady. All right, we'll do this. And we'll do this. There we go. Now I get everything back. I got the access to the other screen. We have all of that fun stuff. Let's see. Will be a liberal. That's lost. Chips sold, yes. Nvidia up. Yeah, I think Nvidia is fine. They will be back to new all-time highs before you know it. Chad says we're in the infrastructure, power, and data centers. Bismarck, he says, I worked in a call center, worst 5 years of my life. I understand. I have done some call centers over my years, and never liked taking calls. I didn't mind managing them, but gosh, customers are just not nice people. Now I do remember story time. I briefly worked at a Rogers call center once, and that's one of the reasons I really dislike Rogers. But I had a customer once. He called in, and this is the way the call goes. I answered the phone and give the whole, thank you for calling Rogers, blah, blah, blah. And he's like, okay. He's like, we're going to play a game. I'm like, oh, okay. So he says, I'm going to ask for credits for different things. Every time you say no, I'm canceling a service. I'm like, okay. So he asked for some credits. I said no. And then he's like, all right, I'm going to drop my phone down to the basic plan. I'm like, okay. He says, what? And he says, you're supposed to not want me to do that. I said, oh, no, I really want to do that. And he's like, why? And I said, well, because the basic plan only has these number of minutes, and these charges you're trying to get me to drop, they would quadruple. And he thinks for a second, and then he's like, damn you, you win. Okay, don't change anything. I'll pay my bill. So I was like, okay. So it's kind of funny. Hey, if he hadn't called and had asked it as a game, I probably would have waived his bills anyway. I was bad. At my job. I mean, I don't mean bad. I mean, I was great for customers, but I was just like, I'm sorry. I don't care that you guys want me to sell everything to people who don't need stuff. I was more like, that's unfair. I'll give you a credit. That's unfair. Here's a credit. So I think on my team, I gave away the most credits out of anybody. And I intimidated my manager. So he would come to try to have a conversation to me about it, and I would just glare at him and he'd leave. It was great. It was great. I think the only reason, like, I ended up quitting, but I think the only reason I never got fired is I think he would be afraid to try to fire me. So it was great. I loved it. Oh boy. Chad says it's an experience. No. Bitcoin to the moon, November 5th. I'm thinking Bitcoin's going to start that journey sooner than November 5th. I'm thinking, but we'll see. Do you believe OLY is highly linked to high rates? I'm thinking about getting back. What are your thoughts on that stock? Also, can you please spike it again in 2 weeks? Spike it again. What am I going to spike? I'm not sure what I'm spiking, but so OLY. So Olympia Financial. It's funny that you say this, Andrew. It is very funny, and I'll tell you why. I will tell you why. I'll show you why it's funny. All right. All right, I'm going to close that down. Let's get over here so you don't see a whole bunch of me. Give me a second. I'm going to pull up something here. All right, so this is a script for the video that's coming out Tuesday. Look at number 5, OLY. So they're actually on a list coming out on Tuesday. So what I do like OLY. And I'm, so far, and let's actually, give me a second. We'll actually pull it up here. So this way here, we can actually have, this was part of the members only live stream. So you guys all get to see a little bit of that. OLY, here we go. OLY. Let's pull up, we're going to pull up the last year. So you can see here with OLY. So they're sitting at 101. Now, our rate cuts began in June. So right about here. Now, the rate cut. So as you can see, since June, they've mostly been moving up. So they haven't really shown any big issue. Because you got to look at it this way too. When you're looking at a company like Olympia, so let's pull up here so you guys can see here. So as you can see, they're engaged in providing financial services. But obviously, when you provide financial services, it's based on interest rates. So you get the double-edged sword. And this happens with banks. It happens with companies like this. So when rates go down, you're not making as much interest. Simple as that. So that does hurt your revenue stream. However, people who couldn't afford some of that interest all of a sudden are paying more. So you end up running into a situation where you're having less defaults as the rates come down. So they kind of balance each other out a little bit. Now, OLY definitely is worth watching over the next little while. And I mean, I do like what they have done in the last, like if we look at these guys over, like look at them over the last 5 years, you can see they have been growing. They have been doing really, really well. So will they spike? Will this be the turning point? It could be, no doubt about it. I am still a little more optimistic on them, but I would still watch them. I think anybody in the financial sector, I would certainly watch. Like right now, the only sectors that I'm not worried about in any way at all are, of course, real estate, utilities, and I'm also getting a little bit excited about communications, only because of the fact that they are all like Bell, TELUS, Rogers. They're so ranked up in debt that this is a good thing. Rates coming down are going to help them pretty good. And you can even see here. Let's go to Bell. We'll go to Bell this time. All right, we'll pull up. Here we go. Let's pull up Bell. We're just going to go to the 6 month because we're kind of concerned from about here. So here's June. Since June, you can see they've already been responding. So we have the slope. We definitely have the slope. So that's not too shabby, not too shabby. So, and we're seeing this in telecommunications. We're seeing this in utilities. We are seeing this in definitely REITs. Holy banana bread. REITs is that one area that I am absolutely stoked on. So I'm just trying to think of a REIT we have not looked at in forever. Let's see. What about, I don't know if we've looked at Slate Grocery REIT. So let's go to SGR. All right, and let's go to that 6 months. And you can see in this case here, look, they got off. Like here's the 6 months, June, and back, they're doing it. We got the slope. We got what we're looking for. And we're going to see, I think it's going to be a situation. It's going to be funny. If you've ever remember back during the bull market, the one that took place right after the pandemic, I believe there was one YouTuber that pretty much was just throwing darts at a dartboard to pick stocks, and they all did well. So I think with REITs, we're in that situation. REITs, also utilities doing good, except for, if I mention utilities, I always have to throw in that exception, Algonquin. Don't go near it. Leave them alone. They're just not doing that fantastic at all. All right. Why I love. Yes. This is the one. OLY is the one back in their back when they were much cheaper that I did buy in a whole bunch at one point. I spiked it. Yeah. The Ontario Securities Commission ended up well, they didn't call me directly. They contacted a National Bank, and then National Bank put a freeze on the account, and I had to talk to them and explain myself. So, fun. What, Olympia? They provide financing, so they're basically financial services. Let's see. Nuke is the hot stock not talked about. All right, well, let's see here. Is that its ticker, NUKE? Why not? Yeah, give me their ticker, Chad. I'll bring it up. All right, Vanessa's in the house with a hi, everyone. See, what do you think of STT, State Street Corp, versus VASGX? Well, let's look at STT first. STT. There we go. So State Street Corporation. All right, here we go. And we'll just look at, we'll go to the 1 year on this one. So I mean, this is nice movement. I mean, they have been moving up. They have been doing well. Let's see exactly what they do. All right. Well, financial services. So once again, similar situation. All right. That's not too shabby there. Now, let's go into their key data here for a moment. Take a gander here. They do have a fair amount of debt, but once again, financial services debt is normal. So 149% debt to equity is not that bad. Return on equity, 7.38. Return on assets. Also keep in mind, ROA on financial type companies, like especially on banks, tend to be pretty low. So that's absolutely within normal considerations here. Let's see here. I'm not looking for. Here's what I am looking for. Oh, we're already there. Yeah, return on equity. Perfect. And they do have dividends, so not too shabby. All right, now the other one you were looking at was what? VASGX. Let's go there. VASGX. Let's see here. VAS. Yeah, it's not coming up in my normal thing. Sometimes I will find that with some US ones, but I will say that I do like the STT. I think it's fine. I like the movement on it. The big thing, though, is as rate cuts begin in the US, so especially if you have another 50 basis points happening before the end of the year, just watch this. Make sure that they have a good balance. Make sure that it doesn't impact them. But I think they'll probably be fine. Let's see. All this AI talk, how is it going to be powered? Well, hopefully nuclear. Hopefully nuclear. No, AI does take a lot of power. Like you take the new version of ChatGPT. So that's the ChatGPT. What is it? 01. It it actually uses much more power than ChatGPT 4. So, yeah, we definitely need to address the power issue with that. So, definitely something to keep in mind. All right. Lisa says, can you look at Granite REIT? Yeah, I can look at Granite. What was it? GRT? There we go. All right, let's just go to that 6-month. So once again, look here, June, and there they go. So that is not too shabby. They're definitely do. And I think, as I said, almost any of these that you look at, you're going to see it. Which is one of the reasons that I have been playing, of course, with our RMAX, because this is just an ETF that's providing like a whole bunch of we only need to go to the 6 months because they're a new ETF, but they have been doing fantastic. Now, I do think October they should get up to 19, so I'm looking forward to that. But they're just doing really, really well. So I get in, pretty close to 16. Now I have, of course, added more to it, so I keep on averaging up because that's the only way you're going to go with this one right now. But they also have a nice dividend. So 8.695%. So in addition to what we were already getting. So yeah. Let's see. Thinking about putting some money in STT tomorrow. Yeah, there's nothing wrong with that, but keep your eyes on it for sure. As the rates start coming down, just make sure. I mean, I think they'll be fine, but it never hurts to pay attention, especially, anytime you're getting into a new position, doesn't hurt to pay attention at all. Ryokan on a tier. Oh gosh, yes. So Ryokan here, REI. Whoops, that's Rio as in REO Speedwagon. But we're looking for REI. All right. All right. Now, Ryokan, let's go to their 6 months. So look at this. Once again, same thing. Here we go. 6 months and bang, we get this whole big slope. It's the same story right across the board. And the beautiful thing is, and I had this question asked, I think in the last market close, well, hey, is this all front loaded? Is all that growth really, have we already got all that growth? Well, here's the thing. If you look back, just look back, you can see Ryokan is normally around $25. So you've definitely still got all of that space. So pretty much the same, just slightly more than what they've already done. They still have that to do and more, because this is $25. But keep in mind, add all of the inflation that's happened since then, and that $25 could easily be, maybe they're going to settle between 28 and 30, somewhere in that vicinity. So that's something just to sort of keep in mind. All right. CRT.UN on a tear. Yeah. Once again, it's another REIT. So let's take a look here. So CRT. Here we go. So CT, this is the Canadian Tire one. Now this doesn't look like a tear right there, but that's, that was the end of last week. Look at their 6 month. Once again, same thing. Be right back then in Nuke. All right, so URA. So, all right, let's go. Let's look at some uranium, folks. All right. URA. So this here is the Global Uranium ETF. And I've learned my lesson. If I click on the first one, it's never real. The second one is. Let's just look at that last year. So you can see uranium was doing good, but then we did have a slide. But now look, it is starting to come back up a little bit. I'll always maintain that when you're talking about uranium, I definitely think it's going to be big in the future, but you're going to have some volatility in the process of getting there. So definitely something to worry about. All right. Lisa says, I struggle with averaging up. Convince me it's okay. Okay. I will convince you right now. Let's go to VFV. This is the Vanguard S&P 500 ETF. I just think it's a good one to show. We're going to go to 20 years. All right. So what is this doing over 20 years? It's doing one thing. It's going up. And it doesn't really matter. We can go back, we'll go back to 5 years. It's still mostly going up. You do have down points, absolutely. But here's that thing. If you're, let's say you're here and you're like saying, 97, it's just too much. It's too much. Yeah, I'm gonna wait for a correction. And maybe you have a little correction, but you're still waiting and you're waiting. And at this point, you're thinking, oh gosh, I should have bought at 97. But you'll notice you never get back to 97 at that point. So stocks do go up, especially if you're looking at good fundamental blue chip stocks. That's the typical way that stocks go. So a lot of times, like there's a few exceptions. So in this case here, if you bought it at 106, you're, back in 2021, you're not getting back there until 2023. But that's because, well, bear market, right? Let's see here. Yeah, the 2021 bear market, bang, right there. So it really boils down to the fact that, yes, there are going to be points when you will go back down. But here's that thing. And this is why dollar cost averaging works. So the reason that dollar cost averaging is that number one way to buy things is, Jamboard. Clear the frame. I just got to move something off the thing because it's blocking my Jamboard. The reason dollar cost averaging works here is all right, we'll come in. I'll just we'll just do a green here. When you look, maybe you get a bigger correction. Whoops. Oh, we went back in time there. Don't worry about that. But that's the way things tend to work. We're always going up, but we're going up at a staggered reason. Now, dollar cost averaging works because, all right, we're just going to put in a B for buy. There we go. And maybe we buy every so often. But you'll see that what's happening as your dollar cost averaging is, you're paying more, but every so often you're getting some really good deals in there as well. So what ends up happening with dollar cost averaging is that as you move along, you will find, and we'll make a new line here. Let me we'll do a red line for this. You'll find that, whoops, this is not as straight as I'd like it to be, but you'll find that you're paying more of an average price rate along the road, and that becomes more of a fair price. But the reason is this is always it's always going up. That's why this will always work, because when you have a regular schedule, you paid more this time. You paid more this time, even though it's down a bit. You paid more. This is one exception where you did pay a little bit less. But once again, you paid more. You're always going to be paying more. All-time highs are always going to happen over and over and over again. We have those occasional moments where we do go into bear markets that become that exception that, then, hey, fantastic. You can pick up more at that point as we go into a bear market. But, overall, you're almost always going to be buying at all-time highs. There's just no way around it. And especially if you're a long-term investor, I wouldn't even worry about it, because when you're sitting here, right here, you know what? Profit, 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 profit. Every single one of those buys is profits. So that's kind of the way to look at it. The big thing, though, especially with long-term investing, is, when you are here and it starts to go down, is not to panic. That's a great buying opportunity in that case. But, as long as you're holding long-term, this one here, because if you look at it right here, you're back in profit basically right here from this point up. So definitely, I would never be super concerned. I know a lot of people are kind of like, excuse me. A lot of people do get kind of caught up in it. They get caught up in the emotion of investing. don't get caught up in the emotion of investing. So definitely something to keep in mind. All right. Oh boy, the chat's pulling away from me. All right, I'm up 20% on my RioCan. Yeah, not surprising. Not surprising. Let's see. I hate that too, but it will go higher. Yeah, every single every single all-time high they always get. Now, if it doesn't, then you are not in a fundamentally good company, because you will occasionally. There are companies out there that Nortel. If you invested in Nortel, you probably lost money. You probably lost money. Let's see, RioCan to the moon. Yeah, absolutely. For short term, eventually they will level out. They will find that equilibrium, and then they'll just be a good, a good income stock. Until once we get into a situation where we start raising rates again, that will of course cause REITs to go back down. But here's the thing: that's when you move. You can move your funds out of REITs at that point and put them into another category or another sector that's doing better. 9 says, I'm slowly selling out of HMAX at a capital gain and putting it into ENCL. So yeah, oil's down right now, but it won't be down forever. It will be going back up. So yeah, while it's down, that's a time to be stacking for sure. Let's see, up 3% BM in my new position. Nice. Let's see, I'm waiting to get ahead on smart centers, then I'm going to trim it. Yeah. Well, that's the thing. I mean, there's nothing wrong, with, having a plan. So I'll give you an example here. All right. So one of the companies that I am riding right now is, and it's not a REIT, but it's actually a mortgage investment company. So TF, Timber Creek Financial. All right. So this is a company that I am riding up. I'm riding the wave. I'm going to come over here to the 5-year, though, for a moment. So you can see that normally this is a company that hangs out around $9. So this, to me, seems to be a good equilibrium level for them. So they're up to 8.11. And you can see all the way back in, take a look here. All the way back last year, they were down at 6. So a year ago, a little less than a year ago, $6.12. But now they actually started going up before the REITs did. And that's because they are a slightly different entity. They're a mortgage investment company. So once the rates stopped going up, they started to respond. So they responded before the rate cuts, and now they're loving the rate cuts too. So they're going to go up once they get back to, and I'm saying probably about $9. At that point, I might get out. I might. Now, I keep in mind too, they have a very nice dividend of 8.508%. So I could stay for that reason alone, but I might trim some of my profits at that point. So it's, having a plan, not a bad thing. Let's see here, $7.55 a share Rio, but love the monthly dividend. Yeah, they have a good dividend as well. That's one of the nice things about REITs in general. So Andrew says, try to average down on National Bank, Royal Bank, Dollarama, Alimentation, Couche-Tard, and Olympia Financial. Nice. AR19, are you the Mountain in Mountain Finance? I am. That's my last name, actually. Andrew says, OLY is Olympia Financial, and they've been doing better than National Bank, and also have a 7% monthly dividend. All right. Jay says, is there something better than HHL ETF? It costs $8 per share, but 6% dividend could be better. So HHL, what is that? The Health Leaders, I think. Harvest Healthcare Leaders ETF. So here we go, $8.88 a share. So let's take a look at their 6-month. Now you can see they have had a little bit. They have been benefiting from it, but also keep in mind too, a lot of these health leaders, depending on what they're holding, they may be holding some of these healthcare REITs or health-related REITs like Northwest Health or things like that. So they're definitely benefiting from it. I'm not sure if there's any that I can think of that would be completely better. I'd have to look a little bit more into the healthcare sector to see if I can find something. So I don't know of one better, but I do think that this is one that is going to certainly be good going through. And as you can see, you do have a 7.917% dividend. So that's not too shabby. So yeah, definitely not bad, not bad. So, but I assume that I'm pretty sure that they're using covered calls in here as well. That's probably buried in there. But I'm assuming if you're this type of an ETF and you're not using covered calls, I can't see you hitting that dividend. So let's see, how does it compare to EQB? I do like EQB. So EQB is equity, EQ Bank. So, or you could call them Equity Bank. That's their kind of the bank that owns EQB. I do like EQB. I think they're a fine company. Now, let's just actually take a look. I haven't looked at them in probably a couple of months. So let's see how they're doing in regards to their the rates. Did you have to now? This is yeah, they've been doing fine. Like, look at this. You can see, and just before actually, back in May, I think this was this had to have been an earnings call. Looking at this here. But yeah, they're on a very nice trajectory right now. Now they don't have a huge dividend. So, looking at 1.748%. So, when it comes to the financials, you're not getting the dividends. You're going to rely on that growth. And I do like this company a lot. I actually use them as my bank. So they are my bank. So definitely like that. I like them. I do, Chad. I think they're a good company. All right. In my opinion, what is the way out of traditional banksters? Well, here's the thing. You got to look at what the problem is. And this is kind of one of these things. When I first initially got into EQ Bank, I liked everything they did, but they didn't have enough services. But they have been expanding. So they've added a card. So, for example, if you need like a debit, like a debit type card, they have one. You can load it up. It's like a loadable card. You load it up, you can use it that way. There's still more things I'd like to see them add, and I think they will as they grow. They've actually picked up the levies as their spokespeople now. So, they're making some headway. I do like them. Yeah, absolutely. VDY Pizza. Yeah, well, some of these, and some of these food things, they're going to react well. So let's take a look at Pizza, for example. Because one of the issues is while the rates were going up, people were getting into that point where they were spending less. And it was hurting a lot of the food services type stocks. So you can sort of see that is exactly what has been happening. But even as we got the initial rate hikes, people still were kind of holding out. But now we do seem to have a little bit of a bump here. So I'm hoping to see as we get deeper into rate cuts, I think this is a sector that will start to do better. And one of my favorite stocks, royalty stocks here. Let's see. All right. So SRV.UN, Sir Royalty. Like, I love this stock, but I will tell you, it has taken a beating. I'm just going to go to 3 years here. This is a stock that has been on a great trajectory for a long time. And then came the rate hikes. And as people stopped spending, they have absolutely plummeted. So this is a low. But this here has been a stock, and even I'll go back even further. Here's the pandemic right here. And, they struggled a little bit after the pandemic because, well, what was going on there? Lockdown. People weren't even allowed to come to their restaurants. So, of course, that's going to happen. But they had a fantastic bear market. And even the bear market. So you'll look here, and once they had a bit of a bull market, and here's where the bear market, this up here, that's in the bear market. So they really didn't even get bothered by the bear market. They did fine through the bear market. They weathered it like champs. But once you start making people pay a lot more interest, that's when things got hurt. And, they've come down, but I'm still I'm still pretty bullish overall on this company. I think I hold them in the challenge. And I think a lot of people are like, why aren't you getting rid of that one? And I'm like, nope, I'm just going to keep adding to them because I have faith that they are going to rebound as these rates come down. Obviously, I'm not going to put all my eggs in this one. If I had to put all my eggs in one sector right now, it would probably be real estate. But I still would never do that. I'm very, very diversification focused. All right. Chad's old. All right. There we go. I should have put that as our top story. Let's see. Look at money and a percentage, then emotional response out of the equation. Let's see. 2030 oil get cut in half. Be aware. Yeah. Well, there's a lot of things. I mean, as we get closer to some of these laws and some of the EV stuff that's coming in, that's all going to take. That'll all be interesting. But keep in mind, these goals are the liberal goals. Once we get a change in government, some of these goals may actually start to sort of dissipate a little bit, and they might change. So, play it by ear. But eventually, we will move to out of fossil fuel. I mean, it is an inevitability. It's one of the reasons that I love companies that, take a company like Enbridge. They have sunk a lot of money into renewables so that they're ready when that does happen. So that's something to keep in mind. If you're looking at a utility company or an oil company, see what they're doing in that. See if they're making some of those transitions to ensure they have a good future. 9 says, saw another doom and gloom channel promoting Moo. Oh boy. Yeah. Yeah. So for anybody who doesn't know, I have turned down sponsorships from Moo like crazy because I don't believe in them at all. It's a product I'll never use. So I'm of that type that I'm not going to come on here and lie through my teeth to say, oh, these Moo products are great. Oh, you'll love paying commissions on your trades. I'm not gonna tell you guys that. I'm not gonna dirty myself for a company that I think is pretty sketchy. So I don't like Moo, and I will not sponsor Moo. And a matter of fact, if you come on here one day and I'm sponsoring Moo, please leave because I will have lost all credibility. So Moo, no way. I will not ever. Can you look up Zeo? Yeah, I can look up Zeo. Let's pull up Zeo, Z or ZEO. There we go. So this is the BMO Equal Weight Oil and Gas Index. Boom, here we go. Perfect. All right, let's go to their last year. Now this is a company, this is doing much better than a lot of the oil companies, but you got to keep in mind too, I don't know what companies they hold, but they're probably not just holding, oil companies. They're probably also, I imagine they've got a lot of the utility companies in there too. And as the utility companies sort of help carry them, that makes it a little bit strong for them. So yeah, now this here is one. This is the BMO Equal Weight, and you can see they're doing well. Now I'll show you something here. This is another ETF that I love, but they're not doing as well. They're definitely not doing as well. Yeah, that looks good, but that's like the last 5 days. But let's do the same thing. We'll look at the last year. So they did do well for a bit, but they have been kind of on a slow decline. But I think because this here is, they have the capped energy index. So they don't have a lot of utility companies to sort of pull them up. So they're more tied more directly to natural gas and oil, of course. ZID. And that there is in India. That's his India one here. So let's go here. ZID. Whoops. ZID. Now, India right now, I mean, I don't think you can go wrong with the Indian economy because they're getting ready. Like a lot of the world is moving productions from China to India. So that, means India is just booming. They're now the most populous country in the world. And let's just look at the last year. Here we go. You can see this is a fantastic place to be putting money, to be honest. I think India is going to be strong for a while. Like there's not even, how we sort of talk about recessions here and how we could be going into a recession. That's not even a question in India. Right now, it's pedal to the metal as they're building infrastructure and getting ready to take on more and more of the production of the rest of the world. So yeah, India is a great place to be making some money, that's for sure. All right. And EQB has a new business account. Yes, absolutely. See, and that's the thing. They do keep on adding stuff. I love that. VDY, VFV, ZID, all you need to own. And Chad's not a fan of the covered call. So non-traditional banks is the way to go. Yeah, absolutely. Absolutely. ZID, there we go. If Moo was only free, there we go. Yeah, even then, I don't know. Moo, for one, the first time they reached out, I took a look. I actually went to their website, looked at what they had, and I'm like, oh, this. I didn't like the website. I didn't like the fee structure. And then the fact that me saying no means that they would have to sort of ask me over and over and over again. I'm like, no, I already said no. So let's see. ZID don't care anyway, always up to the right. Yeah, they're doing fantastic. Let's see. Does Questrade have income projection charts like Royal Bank, RBC? I don't know. I've never used Questrade, so I couldn't answer that question. However, a certain banana bread in a t-shirt probably could answer that question because he is big on Questrade. So that's Canadian in a t-shirt, by the way. The channel has nicknamed him Banana Bread in a t-shirt. Well, actually 9 nicknamed him, and the rest of us just went with it. But yeah, and he's pretty good at answering. Just go over and leave a comment on his video, ask him. He'll get back to you right away. Well, within 24 hours. Andrew, what do you think about Dollarama? So I like Dollarama. I mean, it is a store that does well in a recession. It also does well when people have less money to spend. So I think that's going to keep them going. Now, one of the interesting things is even though we've got inflation under control, even though rates are coming down, I still think a lot of people have a lot less disposable income on the other side of all of that inflation that happened because a lot of people's wages did not go up to meet inflation. So a lot of people are effectively making less even once we get the numbers back to normal. And that will be good for Dollarama. That'll be good for people who are looking for those bargains. So I think that will work out for them. And I think Dollarama is a strong company. I don't see them as ever really going away per se. Let's see. ZID, look at it. Well, I just did. It's up there right now. Let's see. Can you look up Tigro? Yeah, of course I can look up Tigro. All right. Tigro. Here we go. So this is the TD Growth ETF portfolio. All right. Let's go. We'll go to the last 1 year. Yeah. And once again, this is not a bad movement. This is obviously they're investing in heavier growth stocks. So, and that's not too shabby. So you're not going to get very much of a dividend here. So yeah, 2.071%. But I do think it is and there's a lot of good, I think there's a lot of good growth ones. This is definitely one for sure. All right. Because I mentioned 9. Perfect. We got it. All right. 43 of you in there right now. Have all 43 of you hit that like button yet? If not, I'm going to have a drink and you guys can have a chance to hit the like button. Okay, perfect. All right, there was something I wanted to look at, and here it is. So this is the TSX monthly. So this is these candles are 1 month. So this is the September candle right here. And as you can see, we're nice and green right now. And those of you who are like, okay, but why are you showing me this? At the beginning of the show, I asked people, did you think September was a red month or a green month so far? And most people got it right. Most people said green, but a handful said red. So we are in a green month, and this is a pretty. I mean, that's a lot of green. So we would have to have a pretty. We'd have to have a pretty bad week, I think, for us to actually turn that into the red. So I mean, right now, I mean, pretty much we're at all-time highs. So that's not too shabby. Yeah, so we have a pretty good month. And as I mentioned before, this is like last September. Let's see here. September 2023, right here, was a big red month. So last September was a horrible month. The September before that, April, May, June, August, July, right here, another bad green month or red month, sorry. So yeah, we've had two of them in a row, but this year we're bucking the trend. We have we have that nice green candle for September. So not too shabby. Let's see, ZID ETF, all I got to say, 36%. No, it's a good ETF, absolutely. Mario says, I see 44. Hello, how about XEQT? All right, let's get over there. Let's get over to our all equity. All right, XEQT. I do like all equity. It's certainly, I mean, it's one of these ETFs that when you get it, you're getting like a thousand different stocks inside of it. So let's look at that last year. And as you can see, just doing fantastic. Now, you're not going to get a huge dividend here, 1.884%, because a lot of the stuff that's in here, it's all growth. You got emerging markets in here. You got exposure to the world. This is absolutely just fantastic. If you're, and this here is the iShares one. Now, here's the big difference, by the way, guys. So this one here, you'll see it's a quarterly. There's also, Vanguard has one as well, VEQT. And I'm always usually comparing the two, like they're in a battle with each other. And we'll go to the 1 year. And you'll see it's pretty much similar. They're doing pretty much the exact same thing. However, and this is the big difference. If you like the dividends, with this one here, it's an annual. So you're only getting dividends once a year. And it does have a slightly less distribution yield as well. So this one is a bit more growth focused than XEQT. But I know there's a lot of people out there that love XEQT. They think it's the only ETF you need. Perhaps. But if that's the case, it is a situation of putting all your eggs in one basket. I mean, iShares is probably not going out of business anytime soon, but at the same thing, it never hurts to spread your money around. It really, really doesn't help. Doesn't hurt. Sorry, not help. Let's see here. Hi, Candace. I listened with a very long delay. When you talked about gold and silver ETFs with the Sprott physical ones, you can have your shares delivered in bullions for a fee. Oh, interesting. Well, there we go. I did not know that. So that is kind of cool. So here's that situation, Chad. And I think it was Chad who was part of that conversation. And Nine. I think it was Chad and Nine. So there we go. Well, at least with Sprott, you can get some gold bullions. I like that. That's fantastic. Yeah. Yeah, India is definitely one of those countries that has a very good fertility rate. Now, I don't know if they're first, though. I'm pretty sure there's some places in Africa that are beating them. I'm pretty sure. I could be wrong, though. Maybe you're right, but it is a possibility. All right, guys. We got a super sticker coming in from Y Videos. So you guys know what that means. That means that Y Videos is the GOAT. There we go. Thank you, Y Videos. Always appreciate you. All right. Fantastic. All right. XGrow is also a good option. Yeah, XGrow is very similar to the T1, the TD1. So let's just take a quick look here. XGrow. Bang. There we go. So this here is the iShares version. And we'll pull up the 1 year, and you can see nice slope. We got some nice movement going on up here. A little bit of every so often the market has a hiccup and you can see it. So not too shabby. All right. Michael says, we still have 9 more days and anything can happen in 9 days. Yeah, absolutely. Anything can definitely happen for sure. Um, yeah, that's 100% true. I would like to think, now, mind you, we have 9 more days, but they're not all weekdays. So I think if we get through this week here, then we should be good. We should be good. But yeah, no, I mean, you can have a market crash that can completely tank things in days. So let's hope. Let's hope. Well, knocking on wood here. It's causing everything to shake. It's not an earthquake. It was me knocking on wood. Let's hope it doesn't happen. Let's hope it doesn't happen. All right. Chad is DCAing in Dollarama, VD, VDY, VFV, ZID. All you need. There we go. There we go. Yeah. I mean, and that's the thing. Like, you never want to get yourself into a situation where you're investing in more stocks than you can effectively manage. So in some cases, I mean, some investors, maybe you have that investor who, like, I can handle one. I'm gonna handle that XEQT, and that's fine. That's fine. Absolutely fine. Um, or you have somebody who's like, okay, I can manage maybe 5, 6 stocks. And usually, though, and this is what I say, usually if you are one of these people who's like, I don't really have a lot of time to manage a lot of stocks and I don't know what companies to get, you're probably better off with ETFs in those situations. Things like, of course, Chad has it down there, VDY, VFV, ZID, maybe throw in XEQT in there too. So there's definitely opportunities there that you can get a really good diversification by going through ETFs. And it's kind of interesting. There's so many different ways that you can approach investing. So I think that's darn cool for sure. All right, here we go. All right, while you guys are coming up with more questions for me, let's head over to the Discord for a moment. So for people who are new, I wanted to the Deadpool. JJ, my mod, has gone through and renamed everything. I named a few things back, but the Deadpool is the pool. It's basically, these are the list of stocks that have been requested. So I put them in here. So the way we do deep dives on the channel, folks, is we do it by votes. So when we have a vote, I pull these out from here. So just today, somebody had requested TELUS, so they've been put in there. I usually try to grab from the bottom. Sometimes I'll grab, sometimes, like, if I already have something similar to, let's say, PKI, I may not pull it right away. But you can see coming up right now, we got a few different stocks, like RioCan should probably be in one of the next ones coming up. So definitely cool. We also have the ETF list. I'm always looking for more ETFs that you guys want me to do, because we do have one dedicated ETF deep dive every month. So that's kind of cool. But that's where that is, the pool. There's a few other things over here on our Discord server. So we do have a Discord server, by the way. There is a link down below. So definitely, if you like the Discord, feel free to join. We also have a Facebook group page, and that schedule is there as well. But I do keep this part here, but it doesn't matter. You don't have to be on Discord to request. You can add it. You can put a request on any video. That's a perfect way to get some engagement too. So just ask for stuff and I will get it in the pool and hopefully get it through for you guys. You will also find on Discord, as well as the Facebook group, the schedule. So what's going on the stream, you can sort of see right now. Well, this is where we are right now. And you know what? I'm going to delete that because we're doing it right now. So it's now gone. All right. I will get rid of this extra set of lines here. So our next video, as you can see, it's coming out September 24th, 2 p.m. High dividend long-term stock. So it's actually high dividend. I actually changed it to high dividend total return stocks. So And we already revealed in this show that OLY is one of the stocks that's in that list. So that's coming out. We got a market close, of course, on Wednesday. And on Wednesday, I'll give you guys a chance to earn another market close for Friday. We also have this other video coming out. It's the channel members choice video. So that is a video that the channel members decide I am going to do. So they vote on that video. That vote's currently going right now. So I won't know who wins that probably for at least a couple of days. So if you're a channel member, by the way, be sure to go to the community tab and vote for the video you want me to do. Channel members as well, for those of you who don't know, they get to view everything 24 hours early. Well, not the live streams. I haven't quite perfected time travel yet, but all your videos, like the Tuesday's video, they'll be able to watch it Monday. So that's not too shabby. Just one of the benefits. And I do like to get stuff from the channel members. I'm always looking to make it a little bit better. So if you're not a channel member and you want to become a channel member, there's a couple of ways. One down below, you'll see a little dollar sign, I think, where you type in your chat, or even on any of the videos next to, I think, my sub count and stuff. I think there's a thing that says join. That way there you can go in. It costs about the amount of a cup of coffee. So just like this. Well, I got to have a cup now. Each month. Or, I said there were a couple of ways. The first Sunday stream of every month, I give away usually about 10 memberships. Sometimes I go over. So we do give some away a lot of times. Well, each month we give away some. So you might win a membership as well. So you want to definitely be there for that one. All right. Anyway, that was Discord. A couple little pieces of housekeeping. And let's get caught up with this. Who has birth rates? Not China. All right. What about the Braille ETF? Like Braille, or you mean Brazil? EWZ. Let's take a look at that one. Give me a second here. Let's get this back. I have not looked at this one yet. I will honestly say that. Here you go. Brazil capped. Perfect. All right. Whoops. That is definitely not the right EWZ. I got to remember that with US stocks, this site likes to put them in twice. And if I don't click on the second one, I don't actually get it. All right, here we go. Let's look at the last year. Well, this is not going great. Yeah, they're definitely not doing very well in Brazil. So, what do they have for a dividend? Well, they get a nice yield, 7.315. Semi-annual, though, so twice a year. But yeah, this is not. I think you can probably do better. I think you can probably do better, Michael. This is not moving in the best direction. But I think, if I remember correctly, I think Brazil is one of them countries that have some pretty crazy inflation. I could be wrong on that. So definitely double fact check that. That's the word for it. Fact check that. But I do recall, I think that Brazil has crazy inflation. Well, let's find out. We'll Google. Let's see. BRA, Brazil inflation rate. Let's take a look here. Let's see. The consumer price index, okay. Oh, that's not that bad. It's 4.24%. Okay. I know there was some country that had some really insane inflation. I don't know why I was thinking it was Brazil. Maybe it might be Argentina. I'm kind of. Let's just see here. Yeah, well, yeah, Argentina was up at 25.5 in December. Yeah, okay. So yeah, I think Argentina has some pretty crazy, but Brazil may perhaps not. So I don't know, Michael. I would kind of shy away from that one. Now, if you're already in it, and you're in the red, well, at least you're getting the dividend. But hopefully that turns around. But right now, it's not looking the best. All right, not the USA. No, I know. Who is the winner? India. All right. let's see. I have income ETF and also growth in case something happens in my regular job. Yeah, it's always good. I mean, as much as I stress, it's good to have an emergency, an emergency fund. I mean, a lot of people don't. A lot of people are like, I got my credit cards, I'm fine. But when you're looking at an emergency fund, you kind of don't want to be paying a bunch of interest on it if you're, in that situation where you lost a job. So, you know, it's not a bad thing. I mean, in this case here, I guess Chad has his physical gold, so that's almost like his emergency fund. But once again, you got to be able to sell that gold pretty quickly if you need it fast. Okay. And 9 says, I'm thinking of to DCA into BMO. My adjusted cost base is 142. Okay. Oh, no, that's not too. I mean, BMO is going to look fine on the other side of the mortgage wave, but it's actually interesting. BMO, I think a deep dive on BMO is actually one of the options that are being voted on for the channel members video. Last I looked, I don't think they were winning. So, but I think they've had a few votes for sure. So down around, oh boy. Chad thinks a crash is coming. All right. Let's see, your KO. Let's see, Brazil, Mexico. Oh, maybe Mexico, maybe. Let's see. Thanks for XEQT. Your thoughts on IBB? Sure. Let's take a look at IBB. Oh, this one right here. All right. IBB. All right. So this is that biotechnology. Definitely a big sector. I mean, it's not a big sector, but I think it's going to be big in the future as we get more and more into practical applications for CRISPR and things like that. I think it's going to be huge. I think it will absolutely be huge. But how is it doing now? That's the question. Well, not that bad, actually. Not that bad. We got some good movement. I mean, this is a very healthy looking growth. No, and they're still in their growth phase, so they don't have a dividend. That's fantastic. Let's take a look at their return on equity. What would I like to see for them? I would like to see at least I'd love to see about 15% or higher. So that would make me happy. Let's take a look here. Seriously, they don't have it listed. Oh, that annoys me. All right, let's go to Yahoo Finance, see if we can get it. I want that number. But wait a minute before I jump at that. Let's just double check here. Oh, it's an ETF. Never mind. I read the biotechnology. I stopped at that. I didn't read ETF. Okay, so that's fine. No, this is a nice looking growth. I do like the growth on it. It is a sector that I feel, go back to the growth. It is a sector I definitely feel is going to be huge in the future. And we're starting to see some pretty good growth. And there's a lot of things coming along. I believe already that CRISPR has been used to treat. I think one person so far has had it treated where they actually treated their cells with basically to rid it of sickle cell. Was it sickle cell anemia? I think it was sickle cell anemia. So there's so many applications coming up for things like CRISPR and biotechnology in general. So I do see this as being huge. Definitely huge. All right. Also, you can use RRSP tax-free if you have zero income, pull dividends and interest from the RRSP. Yeah, absolutely. Now, mind you, and this is what you have to be prepared for, a lot of, unless you've got it set up as a RIF already, but you probably don't. So if you're pulling it out of your RRSP, you are probably going to have to pay 15% withholding tax, but you'll get that all back from the CRA. So just keep in mind that. So if you need $1,000, you might want to pull out a little bit more than 1,000 to cover that withholding tax. So that is something to keep in mind. However, and let me just sort of reiterate this. If you're pulling it out tax-free, you probably only want to check, of course, the tax charts and see how much you can actually pull out without being any taxes. But that's a beautiful way to that, and I think in my RRSP meltdown, I did actually cover that. But yeah, if you have, like, if you've made nothing this year, and let's say you can make up to, I think Nova Scotia is the worst in the in the country. If you can make up to like $5,000, let's just say, we're just using that. I'm just pulling that number out of my butt. You want to pull that 5,000 out of your RRSP because you're getting it 100% tax free. And that's going to be your only opportunity to do that. Well, next year, if you make no money, you'll have another opportunity. But yeah, take advantage. If you have a year where you make nothing, take advantage of it for sure. Excuse me. Michael says, how much of a dividend on EWZ? This is not EWZ. Let's take a look here. All right, this is that iShares one. What was the dividend on here? All right, semi-annual, 91.4 cents USD per annual. So twice a year you'll get $91 or 91.4 cents twice a year. That's not too shabby. All right, got a frog, so I'm gonna have a drink. Okay. Let's see. Bismarck, he says, I have too much in PSA, need a DCA into VFV and ZQQ and XRE. Yes. JC says, Venezuela and Zimbabwe had crazy inflation. More reason to invest, not working for money, but let money work for you. Yeah, absolutely. Let's see. 9 says Zimbabwe stock market up and to the right. Interesting. I've honestly not. I've not looked at Zimbabwe stock market, so I did not know that. Andrew says, "Are you familiar with the RDSP?" So that's your registered disability savings plan. So it is. It's a lot. It's actually a lot like the RESP, but it's slightly different rules. Yes, I am familiar with it. So those of you who don't know, Jill is legally blind. So she does have an RDSP, and I help her with that. So I am very familiar. The big thing about the RDSP as well is you can get grants. So where you can basically, you make a deposit and the government will match you up to a certain amount. So there's definitely extra money, but keep in mind, if you pull money out of your RDSP before you retire, there's a whole bunch of rules about it, but you can actually lose some of them grants, and that money can then, the government can come back and say, yeah, we're taking our money back. So, but it is a good program. And the beautiful thing is it doesn't have to be for you. If you have a child who has a disability of some sort, you can set one up for them. And that's sort of a way that, you can be assured that they have, some money in the future for themselves. So let's see, it should be around 15K tax for free. Yeah. And some provinces, you have a lot more money before they start taking taxes. And also keep in mind, sometimes if you are going to pay on that very first tier, that marginal rate there on that tier, it may not be that bad. So you kind of have to look at things, especially if you have like, if you're going to have a lot more money in retirement than what you have now, at least taxable money, that might be something to look at. But I would highly recommend that if you haven't checked out the RRSP meltdown video, definitely do that. Actually, it's a funny thing. It hadn't really even crossed my mind, but I had a bunch of people in the chat say, please do it. So I said, okay, I'll do it. And the funny thing is, it's now the second most watched video on the channel. So that one has had 6,000 and some odd views. So it's doing pretty good. Not the first. The top video on the channel is actually an OAS and GIS video. And it's had 25,000 views. So, had a couple of really good videos like, that have popped in. But certainly would love to get another one like that. So, maybe you guys will come up with another crazy idea and I'll be like, ooh, this is great. Let's do it. Let's see. Can you look up TGRE? Yes, I can. I thought I already did that today. I feel like I did. Yeah, yeah. Global real. No, 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 not this one. It was another TG. All right. Ooh, global real estate equity. I love the name of it. I love the name. Let's do the 6 months because we'll see that bump. Yeah, it's the same here. Look at this. September. June when the rate cuts began, and here we go. Yeah, this is another one doing fantastic. It's got a half decent dividend here, 4.382%. So yeah, not bad. Not bad at all. Gotta love it. Gotta love it. Starbucks time. Yes, yes, absolutely. We did have that one show where every time I took a coffee, the a Starbucks account went and sent a super thanks or something. It was actually kind of crazy. It was a very fun show. I don't think it was really Starbucks. I have a feeling that the Starbucks account that was throwing all of these super thanks at me happens to be the same account as the banana bread company. Because there's another account that pops up, and you guys will see it from time to time. The banana bread company that sends me a dividend. Yeah, that's fantastic. But I think it's the same person. I could be wrong. Part of me is like, I want to find out who that is. I'd like to say thank you, but at the same time, I kind of like the fact that I don't know who it is. There's been a couple times I had suspicions. I have had suspicions, but then I'll see the banana bread company pop up at the exact same time this other person is who I thought might have been them is talking, and I'm like, oh yeah, I don't think it's them. So I honestly don't know. I don't know. It's actually funny when the Starbucks thing happened. At first, I thought it was Jill. I was like, "Are you downstairs doing that?" And she's like, "Nope, nope, not me." So, anyway, it's funny. It's funny. You know, I love to be surprised. I absolutely love to be surprised, and there's nothing like that. And having fun like that is absolutely cool. Chad says, "Never a too much past cash. Hey, exactly. Um. Oh, oh." Ship spotting in Niagara. Okay. Have you done any videos on TSLA? Yes, I did a deep dive on them once. They probably could come up again. I'll throw them in the pool. But yes, I did do that once before. I saw your comment, and I'm going to apologize. I'm going to apologize because I think I deleted it for some reason. It's because this is really going to be funny, and I apologize in advance. I I think I read it as ship spotting in Nigeria. In Nigeria, I was like, "What? Ship spotting in Nigeria? This is going to be a scammer." So I apologize. That one, I know it was only one comment. I now know that I now know I misread it. I absolutely misread it. I've been getting, and I'll let you guys know, I have been getting a lot of weird comments lately. And basically, it's just a single person coming in, and they'll give me the name of somebody else who might have 4 or 5 names, or sometimes it's just a place. And I've been getting these like crazy, and I've been deleting them because they don't make sense, and I think they're a scam, but I can't figure out how. And you kind of got caught in the middle of that too. When I saw it at first, I was like, "What?" Now that I see it here in bigger letters, I'm like, "Okay, I owe ship spotting an apology," and I apologize. I take full responsibility for being an idiot. I take full responsibility. I own it. I own it. When I make a mistake, I own it. Jay says, RRSP is great when you buy US stock directly and get back 15% withholding tax. Yeah, yeah, that's not too shabby. Not too shabby. Let's see. Said IT suckers. Okay. Wanderly says, can you see Wolf Speed? I have increased positions. I believe this turnaround in their finances in 2 years. All right, let's take a look at Wolf. This one might have a bite to it. I don't know. Let's see. Wolf. So Gray Wolf Animal Health Corporation. Interesting. All right, let's take a look here. Ba-da-ba-bum. All right, so they haven't been around that long. Oh, let's see here. Mostly sideways, mostly sideways. They are profitable though. That's good. I always like to see if, if you're looking at, I mean, in this here, technically, this is a penny stock. So it is a penny stock. Penny stocks are riskier. They are more risky, but if you're going to dabble in a penny stock, I still say, go with the fundamentals. So for one thing, if I was ever going to get involved in a penny stock, one of the things is that I have to have a positive return on equity, which this one does, 1.24%. They have a return on assets as well. Let's see here. Their debt to equity ratio, they've got a little bit, but as a starter up, you're going to have debt a lot of times because you're definitely pulling that out. It's definitely still risky. So this is one that I personally would call a play money stock. So it's like, I wouldn't put serious money in it, but if I had some play money on the side that I was like, okay, well, let's give it a try. Let's see what happens. This would definitely be a stock for that. But I will say their fundamentals are not bad. They're not bad. So this definitely doesn't fall into the, oh my God, I will never touch that at any cost stock. But I have one other thing that we did not look at, because I just assumed looking at this Animal Health Corp that it's that it's all about animal health and maybe vets or something. But let's see here. All right, so yeah, it says that they are an animal health company focusing and improving on the lives and well-being of vets and pets in Canada. Yeah, I actually like what they're doing. Now, this here is a stock that, if I was looking, like, as an animal lover, I have like 3 cats. This would be the type of stock that I could feel good about, investing in for that reason. I wouldn't look at it as something I'm hoping to get rich on, but I might look at it as this is a really good cause that I would like to be a part of. I could definitely look at it from that perspective. Okay. C9 says fully taxed when you take from RRSP, so you have to melt down or take in ultra low income years. Yeah, exactly. Exactly. Let's see, over my time. You're clueless. All right. Let's see. I have not been around in a while. I finally reached 1K a month in divs. Oh, congratulations, Ship Spotting. That's fantastic. Gotta love that. Tim Jones says, Boeing forward PE is 40. Seems high considering their situation. Yeah, it does. It does. Boeing is one of these companies that every time I think the worst is behind them, they manage to strand astronauts in space. What can you say? What can you say? Oh God, yeah. All right, good. I'm glad you forgive me. I'm glad. All right. Dole PE looks expensive, but look at that chart. Not this one. A Wolf Speed. Well, you mean I'm looking at the? Well, this is still Gray Wolf Animal Health. I think it's a worthy corporation. Okay, let's try Wolf Speed then. Wolf SPEED. Let's see here. Oh, it's the US one. All right. Never mind. Never mind. As a Canadian channel, I normally always go to Canada first, but not a problem. Not a problem. Okay, let's take a look here. Okay. All right. They've been on a movement down. I can see that. Now this is starting to make a bit more sense here. All right. All right. So they're still in their growth phase. Let me take a look here at some of their key data here and see what's going on here. All right. So this one's not profitable. So they've got a return on equity negative 69.03. Oh, that's not good. That's not good. Oh boy. Their debt to equity ratio 700%. These guys are deep in debt. I personally wouldn't touch a company with these fundamentals. Personally. Now, 700% debt, that basically means that for every dollar of equity they have, they've got they've got $7 of debt for every dollar. That's a lot. That's a lot of debt. and their servicing on that debt is huge, and that's probably why they're in the trouble that they're in right now. They probably took out a lot of debt, not expecting the rate hikes that came along. I think the rate hikes killed this company. Not saying that they're done. Not saying that they're done. But they're risky, definitely risky. Now, the rate cuts as they happen in the U.S., that will help alleviate the pain a little bit. But sometimes I'm worried when I think about this high debt to equity ratio. I'm wondering if part of that debt has been that they've been taking on more debt to service the debt. Because if that's the situation, that could be bad. Yeah. Let's actually see what they do. Right now, this company does scare me. It scares me. No lie about it. Let's see. All right. So band gap semiconductors. And you see, and this is an industry that is actually been doing pretty good. So, yeah, I think they got themselves too deep in debt. I think it's been compounding on them. If they're probably going to need a round of more investors or something to save them. But I would be weary. I would be very, 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 very weary of this one. Are you still in UMAX? Currently, no, I don't currently hold any UMAX, but Mario does. What do you think about CLS? CLS. Let's take a look here. Celestia. I know I've looked at them before. Let's take a look here. So this is their 3-year. So they've had a pretty good buildup. Now they have been coming down recently, but I do like that. I do like that buildup here. So let's see here. So they are supply chain solutions. So yeah, they got different. So advanced technology solutions and connectivity and cloud solutions. So I do like this company, and I know they have been in one of my lists before because hey, why not? I do like them. I think they are probably going to rebound from whatever is happening there. But if we go to their key data, of course, they're giving me nothing. I will say I know that their fundamentals have been strong. I have researched them before. I'd pay a little bit of attention to them to sort of see, if there is something going on that I'm unaware of in the news or something that is causing some of the drops they're having now. But as long as they reverse and they get that part under control, I think they'll be fine. All right. Let's see. Congrats, ship spotting. Would it be a good idea to make a video for dividends passive income to achieve 1K per month? Maybe. Something to keep in mind. Yeah, 1K per month. That's fantastic. That's a good amount of dividends for sure. I mean, a lot of people, when you look at overall goals, in an ideal world, your goal is to have enough dividends in retirement that you can live comfortably, and hopefully most of it coming out of your tax-free accounts. So, for Canada, that would be, of course, your TFSA. Perhaps I believe it's the Roth IRA in the United States, but yeah, that would be the absolute ideal. All right, guys, we're almost at the end here. If you got last-minute questions, now is the time. While I'll actually have some coffee while you guys come up with your last-minute questions. Oh, gosh, that's so good. I do like the coffee. It's been a pretty good stream. We've been here for 2 hours and 19 minutes, so that's not too shabby. Not too shabby for Sunday. So coming up, as I said before, on this week on the channel. Oh, there's a few other things I wanted to mention in the coming up part. Oh boy. How did I manage to get all of those open? So as I mentioned, we do have we have a list video coming out on Tuesday. We will have whatever the channel members decide is coming up for the Friday video. We of course got our market close, all of that fun stuff. But coming up, not that far away, October 7th, We're going to do our 3-year celebration live stream. So I think it's a Monday night. I've gotten by popular request, I will be eating some da bomb on that stream. So if you want to see me maybe hiccup, maybe sweat a little, it's going to happen on that stream, and we're talking about a whole teaspoon of it. We'll get a piece of chicken or something to put it on. We'll figure that out. But yeah, that's coming up. That's going to be fun. No real topic for that stream. Also answer questions and stuff. Heck, if I know you guys, you'll ask me really hard questions while I'm suffering from the bomb. And that's fine. That's absolutely fine. I will love that. All right. 9 says thank you for the stream. Perfect. That's a beautiful one to end on, guys. This has been, once again, another great Sunday afternoon with you guys. I'll be back here again next week. We do this every week. You guys know that. We even do, those of you who are new, we do a Christmas Day stream too. So if you're thinking, oh God, it's Christmas morning, there's nothing to do, now there is. So we'll be back here again, and we'll be back for the market close on Wednesday as well on the live stream. So I can't wait. Until then, everybody, take care. Oh, wait a minute. I got to be big screen. Take care. Have a fantastic what's left of your weekend, and let's have a green week. Let's have a green week. I want to keep that candle green for September. So until then, everybody, take